Right. Good afternoon, everybody, ladies and gentlemen. Thank you for attending the last session of the day, I guess. So my name is Cyril Theret. I'm one of the co-founders of IPSX, and IPSX stands for the International Property Securities Exchange. So maybe what I'd like to do over the next 20 minutes is really to tell you about who we are, what's the journey that we've taken, and how is that relevant in the context of PropTech, and maybe lastly about the benefits and when we're going to go live, because at this stage we're still a startup. It is very difficult to access returns from the commercial property market. And quite incredibly, the investment community, so i.e. the banks, the insurance companies, and the pension funds, view commercial property as an alternative asset class. It's not viewed as a mainstream asset class. And the reason for that is because there is no public market. There's a private market for trading and buying and selling commercial property. There's a fund market that holds commercial properties, individual properties, but there is no public market. And so our mission is really to make that asset class mainstream. The purpose of creating a public market, first, as I mentioned, is to democratize the investor access. Really what we want to do is be able to bring the general public, retail investors, professional investors, whether they are insurance companies or pension funds or fund managers, all on the same platform to be able to access the returns of a single building. By creating a public market, what we do also is we create a new exit strategy for asset owners. So at the moment, if you're an asset owner, the only way for you to dispose of a property is to effectively sell it in the private market, and you have to sell 100% of that interest. So it's pretty much a binary decision of having to hold or sell. And here we're bringing another solution to the market, because suddenly you can partially release some of the value of that single building on the market. And really, as I mentioned earlier on, it's about making it mainstream. And what we mean by that, again, is the democratization of access. So, why have we decided to launch this? And I guess in trying to answer that question, really it's about the journey, the innovation, and also the changes which are happening in the market. If you look at the market 20 years ago, the owners of commercial property were all the banks, the insurance companies, and the pension funds. If you fast forward 20 years, they are all net sellers of commercial property, these institutions. They are accessing the market through the indirect market. And there are two key reasons for that. The first one is that since the financial crisis, there are regulatory drivers which are forcing the institutions to effectively not hold these assets on their balance sheet anymore and to access commercial property through the indirect market. So, for example, through the fund market. But there's also technology. Technology is changing the whole market. It's not just about changing the financial market. It's about changing the property market. It's changing the way people access markets. And the combination of regulatory changes and technology opens up the space for new entrants. And suddenly we can actually launch an exchange which is dedicated to this. Traditionally, the barriers to entry were really in the private market were linked to three things. The first thing is that if you want to buy a commercial property, it tends to be large in size. So typically the average value of a institutional grade property is £70 million and above. So if you want a diversified portfolio of assets, then you need significant assets under management before you can start playing directly on the market. It's also the case that the way the market operates today, it's based on an appraisal-based valuation. So the valuers, the way they value building is on historical transactions, as opposed to, for example, the way shares are valued today in an equity market, which is about offer and demand, and an equilibrium, which is a price. And also, if you hold a property on your asset, on your balance sheet, it's not like just an equity or a share. You actually need to have the expertise about how to develop, how to manage that asset. So the whole industry is really set up around that private market. But because there are new investors, and investors are the REITs, the funds, the fund managers, they have a different need. They have a need to access a new type of liquidity. They have a need for a new price formation, and they need to be able to access that asset without having to hold 100% of it. So what has been our journey? And I think in one of the previous sessions, there was about, how do we put investment into startups? And the journey here for us was very similar to that. When I first started on that concept, I started this back in 2013. And the journey since then has been pretty long. We're now 2017, and we're only going to launch in the second half of this year. And the first thing really was to understand the market that we were entering. My background is financial markets. I had to learn about the property market. How does it operate? Who is in the ecosystem? What are the motivations for people to enter that marketplace? And it was both from the agency market, but also the asset owner market, but also the investors. So that was really that whole phase in 2000 or pre-2014. Once we got the concept, then we needed to really start launching the business. So this was about, creating a board to the company that brought the people, the expertise around all the different, skill set that we needed in order to be able to launch the exchange. It was also at that time that we did the first fundraising where the family and friends came in. We put all our money together and effectively, started the process of creating the blueprint for an exchange. That whole process took the best part of a year to do. Then in 2015, it was all about, well, how do you launch into a highly regulated space? So one of the things about us is that we touch, a lot of sectors. We touch the real estate sector, so we touch risk regulations. So it was discussion about RICS, about how the valuation works and how do they interact with investors, how the whole process works. It's also long discussions with the FCA, the Financial Conduct Authority, which regulates the financial market, because we're creating a new market, so you need to have them on board. And it was also about starting to get the whole of the ecosystem, because you can only launch a market if you have asset owners which are willing to put their assets on the platform, and also you need the other side of the story, which is you need to have investors who are willing to buy into those assets. So 2015 was really about building that. And then in 2016, we started, I would say the second or third phase of what to do, which is we started to move away from the family and friend funding to more strategic funding. So we had people who had bought into the concept. They were all professional firms in their own right, and they started to invest in our business. And we started to formally build the platform, build the documentation that we needed to file with the FCA. And essentially, fast forward mid-2016, and we effectively launched our application with the FCA. That whole process is very long. It's a 6-month process of back and forth with the regulator about the suitability of your business. We continue to get strategic investors in there, so you can see people like British Land, M7, Tritax, who are all well-established brands of asset owners in the marketplace. And then effectively, 2017, this year is when we start operations. So effectively, we're in the final phases of our discussions with the regulators, and essentially, we're looking to launch in the second half of this year. But that journey is a long journey, and you need advice in order to be able to get through that. So why a regulated exchange? Why are we launching a regulated exchange as opposed to other platforms, which I'm sure you've talked about today, like crowdfunding platform or peer-to-peer lending? What's the difference between the two? So really, again, it comes back to the democratization point that I've just talked about. Only regulated exchange allow all that different types of investors to meet in a single platform. It is only what we call a share, and a listed share, that suddenly the general public can invest in, that retail investors can invest in, but also most funds are restricted from investing in other things than listed shares. So essentially, in order to bring that breadth of investors onto the platform, you need a regulated exchange, and only these can do that. With that also comes an element of due diligence and transparency to the market that doesn't exist anywhere else. So And what I mean by recognized exchange, again, I mentioned NASDAQ at the beginning because this was a tech exchange, but essentially our license that we're seeking is exactly the same as the London Stock Exchange, exactly as the London Metal Exchange. And in the UK, there are only 7 of those exchanges, so we will be the 8th. The thing also about us is that it was about what is unique about our proposition is that why is the LSE not doing this? Why is the LME not doing this? Well, essentially, we've created an exchange using the equity framework as a way to distribute to the investors, but we've made it relevant to the commercial property market. So what we've done is that all the practices that happen in a private treaty transaction, we've effectively embedded these on our exchanges. That's a mix of rules and technology around what we're launching. So I've talked about the exchange. What are we effectively listing, or what are the products which are going to be on our exchange? So again, to make it attractive to investors, investors are seeking transparency. They want to know what they invest in. So essentially, the product is a proxy to direct ownership. So hence the concept of an exchange-traded property and of a single building. And so what we mean by that, a single asset, is, for example, is that it could be an iconic building in the City of London. So, for example, the Shard or the Cheese Grater, which is listed on the exchange. It could be, for example, a retail park in the regions where all of us go and do our shopping, where there is a Tesco's and a B&Q and whatever. So essentially, we're effectively replicating what is a single asset in a private treaty transaction, and we've effectively embedded that on our exchange. But it means that as an investor, you're investing into 3 things. You're investing in the transparency of that asset, as opposed to a fund where the fund manager makes the investment decisions for you. Here, you're investing in that single building. You're investing in the ability of the board of that company that holds that building to essentially manage that building on your behalf, so you don't need to worry about that. And then you're also investing into a share, which means that that share, you can hold it in any type of structure that you have. So if you wanted to hold it in your ISA, you can. If you wanted to hold it into a SIP, you can. And if you're a fund, it is eligible for any types of fund structures that there are. It's got that universal acceptance. For asset owners, I guess the benefit is that they can IPO. They can sell their asset on the exchange. So as opposed, again, to having to sell 100% of the value of an asset, suddenly if they want to sell 40%, 20%, 70% of the value on that asset and retain the rest, they can. And again, unlike, for example, other platforms that exist, one of the key things is that there is liquidity. We're providing daily liquidity to these securities. So essentially, these shares are traded on an ongoing basis, and there are market makers who effectively provide a continuous price, who are always there to be able to buy and sell, the shares in that entity which is listed on the exchange. From an issuer perspective, what's the journey? The journey is very similar to effectively what happens into a standard IPO in an equity market. But again, we're shortening it. Here we can probably do an IPO, by the time you take the decision to effectively IPO a building and you go live, 12 weeks. Well, that's unheard of in the context of a traditional equity market where the process is much more like 6 months or 10 months to do that. The reason for that is we've effectively streamlined and standardized the whole process. So effectively, an asset owner like a British Land or a Tritax or a fund decides that it wants to IPO the asset. They effectively take that decision, appoint the number of advisors which are typically associated with a transaction, which are the lawyers, the accountants, and the broker that raises the funds. They put together that documentation. That documentation is the same as the one that there is in a private treaty transaction, but it's effectively formatted in a different format. It's something known as the prospectus. And essentially, that prospectus is vetted by 2 entities, the FCA, the Financial Conduct Authority, which allows for the marketability of those shares to the market, and by us. And then, very late in the process, effectively, the broker determines the price, and at the time of the listing, at the time you raise the funds, you've got the value, and you start trading on our exchange. So that's the I just talked about the traditional process. So how do we interact with the different, all the technology? We're technology hungry as a business. We run a technology platform. Our provider is Cinnober, and the previous speaker talked about blockchain. One of the things about blockchain is that will have a massive impact in post-trade. So our provider Cinnober is right at the forefront of that, because for us that will have impact in our own post-trade about how clearing and settlement will take place for our shares. We're also at the heart of the fintech market, simply because there are new ways of people trade securities. So I've put there an example, which is social trading strategies, where essentially increasingly people go on different social media networks to find out what trading strategies they want to implement themselves, rather than going to a fund manager and seeking advice. We collect a lot of data, and we make use of that data, and we actually do due diligence on that data. So again there, technology is at the forefront of that. But we'll also touch on RegTech, because again, as mentioned early on about an example about the land registry, we have exactly the same issues when it comes to documentation and writing prospectuses, and effectively doing due diligence on, for example, the directors. Again, RegTech touches on all of that. There's another big piece of legislation coming out called MiFID II. Again, that has got massive implications for our business. So again, there we're very RegTech hungry. And also, PropTech, well, it's at the heart again of what we're doing, simply because, again, taking the land registry example here, all that information, the more it is standardized, the more it becomes efficient, and the more our exchange becomes efficient. So we're at the heart of that, and anything that touches with technology has got implications that and increases the efficiencies of our market. And ultimately, that means it lowers the cost of trading, and it also lowers the cost of raising capital. So very briefly, what are the benefits of the platform? So for asset owners, I've talked about it. It's about the ability to release partially on the market the value of a single asset. So again, if I own the cheese grater and I want to retain a 60% stake in it, and I want to only float 40%, I can certainly do that. The key point also about a public market